So our project on disaggregation income statement expenses, or as we commonly refer to it, and as you're likely to hear from others, DISE, one of the reasons it's so important is if you think about it today, pick up a financial statement for a commercial entity. And if you look at the balance sheet, you can pretty easily go for each balance sheet line item into the footnotes and see what makes up that balance sheet line item. But try to do it for the income statement, particularly the expenses. And very often you can't do that. And what we heard from investors was really they were looking for greater insight into the makeup of those income statement line items and what would drive variability in those line items today and in the future. We think we've taken a practical way of dealing with providing investors with additional insight into income statement line items, expense line items. The way we've done it is we recognize first off that not all income statements are the same, so we couldn't necessarily mandate an income statement presentation approach. But what we could do is identify the important expenses that investors were looking for and where they appear in the income statement. And that's what our project does.
Under DISE, a public company will be required in a table to disclose more information about relevant expense captions, such as cost of goods sold and selling and general administrative expenses. The main provisions requires for each relevant expense caption that a company discloses information about the purchases of inventory, employee compensation, depreciation, amortization of intangible assets, and depletion. For amounts not separately broken out in the table, companies are required to qualitatively describe the composition of those amounts in that remaining expense caption. Then separate from the table, companies will be required to disclose the total amount of selling expense and its definition of selling expense.
The FASB expects that the DISE standard will require virtually all companies to report more information about expenses than they do today. And because of the importance of this information to investors to monitor public companies on an ongoing basis, the board decided to require these expense disclosures on both an interim and an annual basis. The DISE standard is a major accomplishment made possible by our stakeholders. It was through extensive outreach in our agenda consultation that stakeholders were able to come to us and make this standard operable. And the result will be capital allocation decisions made by investors that will be more efficient and more effective.